you're a dentist or a computer programmer, a lawyer, or a teacher, you may be able to save some money, but not be able to take the time to learn the best stock or bond investments. You can invest in an investment company, which will do your investing for you for a small fee. There are two kinds of such companies, closed-end companies and open-end companies, called mutual funds. Mutual funds, in turn, are of two kinds, load funds and no-load funds. These are all what kind of company? Right. There are relatively few closed-end companies like the Lehman or Madison funds, and they issue no new shares. So their shares are affected in trading value by both the value of the corporate securities the companies own and investors' beliefs as to future market conditions. The more common open-end investment companies or mutual funds issue shares at any time and buy them back at the current per-share value of the securities they own. The no-load funds don't have the 7 to 9% purchase discount of the load-type funds. What would you think a load is? Yes. Load-type mutual funds are often aggressively sold by salesmen and are a popular investment vehicle for those who don't want to risk investing in one or two company stocks. The fund will repurchase shares at the net value of its investments. In some respects, the no-load type mutual funds may be a slightly better buy. Since they are not sold by salesmen, you may have to look for one. Which type pays a commission to salesmen? Right. Even the no-load fund charges small management fees. Regulated investment companies aren't taxed, but pass on the earnings tax liability to its individual shareholders, separated into ordinary income from interest and dividends and capital gains from sales of securities. Investment companies announce their objectives, so you can invest in funds which buy bonds for safety and earnings, or diversified stocks, funds which invest in shares for both income and growth, and even those that buy the more speculative stocks. Guess what they call these speculative funds? Yes. So you can, through an investment company, spread your stock investments among many companies. By selecting a fund, you can emphasize safety, income, growth, or speculation. There are special industry funds, market index funds, and money market funds, all quite easy to buy and sell. Money market funds invest in short-term deposits, commercial paper from major companies, and short-term treasury bills. They stress income. Balanced funds seek both income and growth in market value. Which do you think the high-performance go-go funds are looking for? Right. Mutual funds do provide a relatively safe and convenient means for investing in the securities market by employing professional fund management to perform diversified investment. But they can be wrong sometimes. You can buy mutual fund shares in lump sums on a regular account basis through your broker, or through some voluntary or contracted monthly investment plan available only through load funds. The latter tends to force you into a regular pattern of saving. A monthly plan may allow for automatic reinvestment of your part of dividends and capital gains, or for a systematic withdrawal for your needs. What kind of account handles lump sum transactions? Yes. Some mutual funds permit the switching of your investment from one kind of security to another. But like most investments, your shares will usually meet your savings goals only if held for longer periods. Some mutual funds are qualified for tax deferral retirement savings plans, and this is a long-term goal. To buy mutual fund shares, first look for literature on them from the investment companies, stockbrokers, or financial publications. What are some items of fund literature? Right. Annual and quarterly reports will describe fund performance. And the prospectus describes the organization, staff, and goals of the investment company. Performance, referring to mutual funds, means earnings and increase in asset value, presumably while safe investments are made. If you wish to compare your fund with others, what would you read? Right. And while it's probably true that some funds do better in some years and worse in others, it is possible that some fund managements are just better than others. You want the best, of course. What would you call an investment company publication which describes its goals, features, policies, investment approach, payment and withdrawal plans, and shareholder privileges? Yes. To buy shares in an investment company, ask your broker. If your broker isn't licensed to sell these shares, he or she can tell you the name of a licensed representative of any fund you may choose. Try as they may, sometimes your fund managers don't perform as well as the regular averages, like the Dow Jones, Standard & Poor's, or the New York Stock Exchange indexes. Well, you can buy an average fund. What kind of fund do you suppose this is? Right. In 1981, high interest rates, high inflation, and a poor stock market made one kind of fund relatively profitable. What was it?
Bastards. You just said that.
Yes. Probably the biggest purchase most families make is a home. This may be a house or a condominium, but its principal purpose is as a dwelling. An important extra reason, however, is that it is an investment. At present, tax law supports home ownership by allowing mortgage interest paid as a personal income tax deduction. If you invest in real estate, which you don't use as a dwelling, mortgage interest paid is a business expense. Millions of families have profited from real property investments. Would you think anyone ever lost money on a real estate investment?
sometimes. An important factor in your non-dwelling real estate investment is the cash flow, which comes from rental income and tax deferral due to depreciation. This cash flow may exceed the mortgage payments. Another factor which is applied at various times to real estate investment is appreciation in value. We've all heard stories of a $100,000 property that became worth $200,000 a few years later.
Okay, sorry, the tape does not want to seem to want to work beyond this, so we're going to end it now.